This conference will now be recorded.
So let's see if we can sell some shoes. Now, there are shoe stores all over Houston, all over Texas, all over the world. With people running these shoe stores who a lot of them don't even have your level of education. So I know that you are going to make up your mind that you can run a shoe store. Today, we just had our little service business, renting cars. That's all we had so far. We're just renting cars. And we simply made an entry to debit cash, our account receivable and credit sales, and we were pretty much done. So that's where we have been. Now we're going to move to a merchandising company, different from our car rental business. A merchandising company buys inventory, then it resells it at a profit. So it buys inventory and it resells the inventory at a profit. So that's where we are today. There are 3 journal entries that a merchandising company make. These are additional journal entries, and we've kind of seen them. But when we deal with a merchandising company, there are 3 journal entries that they make. The first one, they buy the inventory, they debit inventory and a credit accounts payable. And they will always credit accounts payable because, number one, we don't want to pay the delivery drivers. And typically, the wholesaler who's selling the merchandise don't want you to pay the delivery driver. And he's running around delivering and carrying a whole lot of funds. But secondly, you've got to check that inventory. And so you will, when the inventory comes in, you will check the invoice in terms of what you ordered. You know, the inventory stock person will check to see what came in, that all that come in was undamaged. Once that's done, the person in stocking then sends a invoice to accounts payable showing what was received, and if everything is there, then accounts payable cuts the check to pay at that point in time. So we always debit inventory and credit accounts payable. Then when we get the cash and we make the sale, we debit cash and credit accounts, debit cash, account receivable and credit sales. But we also debit cost of goods sold and credit inventory. So this is the new entry that we're making. It's listed as a type 16, similar to supplies, where we once we use the inventory that we purchase, we put it goes to an expense called cost of goods sold. Just like if this were supplies, it would go from supplies to supplies expense when used up. So when we sell it, and that's the big thing, selling it. Buying the inventory is one thing, but selling it is when we're happy. Okay. It also reflects the fact that most companies, we keep track of inventory. We know what we have, especially we selling online. We got to be able to ensure that we have items there. And so, and if we don't have them, we reorder. So we typically are keeping track of the inventory as we sell. And we'll discuss next week a little bit about if you don't keep track of it, as each sale is made, but most companies are keeping track of it as a sale is made. Let's look at our income statement. And when we have a merchandising company, we look at sales less than the returns to get our net sale. We subtract that. Then we're going to subtract cost of goods sold to get the gross profit. So we subtract cost of goods sold, and our job here, is to determine if we made a profit in excess of cost. So we sort of change up the income statement when we have a lot of inventory, and we're going to determine if we had a profit. Then we do what we've regularly been doing. We list all the operating expenses, then we subtract those to come up with the net income. So we always kind of subtracting on this statement. We don't add costs to sales, we subtract it. Okay, any questions? Okay. Let's begin to try to sell some shoes. And in our first scenario with Tanya, the cost of the shoes, the shoe, is going to be $20. And the selling price of the shoe is going to be $50. So if we're in this first situation and we purchase one shoe, what journal entry are we going to make to purchase that shoe? Okay, we're going to debit inventory, and we're going to credit accounts payable for $20 to make the entry to purchase the shoe. Then when we sell it, we're going to debit cash or account receivable for $50. We're going to credit sales for $50. Then we're going to come in and we're going to debit cost of goods sold for $20. And we're going to credit inventory for $20 because we bought it and we sold it. And when we prepare the income statement, it's going to be sales less cost of goods sold, 20. What's our gross profit?
30.
30. Was that bad?
No.
So you use each journal entry.
But okay, that's how I was gonna say where do the numbers come from?
1, 2, and 3. So you use all three of them.
We use all three journal entries.
Mm-hmm.
The assumption was we sold one pair of shoes. The pair of shoes cost 50. They cost 20 and we sold them for 50. So it was one pair of shoes that we sold. Can you sell one of those thousands of shoes you got in your closet that you paid $20 for $50? So so we're using all three journal entries. When you purchase the shoe, this is the entry you would have made.
Oh, each row we keep going with the numbers.
Mm-hmm. Well, we'll see. Then we sold it. And your questions are good because I'm explaining, but you need to let me know, okay, if it's something you're not understanding. So we sold it for 50. It cost us 20. So we no longer have that shoe in inventory. It's gone. and we made a profit of $30. Can everybody do that? Sell one shoe.
It seems simple.
It seems simple.
That's
Well,
how you bait us in. That's how you bait us in. You do it a simple one, then you change it all up. You keep going.
Okay. What is SP stands for? Is
selling
that
price.
huh?
Sales
Selling
price.
Oh, okay. That's how much. Okay.
cost, selling price. All right, I'm not going to bait you the tying. I just want you to sell 2 pairs of shoes now.
So then it will be
Okay, so
40.
it's $40 inventory.
We bought it
Mm-hmm.
this morning. So we
And
bought
that's
2 pairs of shoes.
AP.
We sold out 2 pair,
That'll be
That's
$100.
$100.
$100.
That's 100.
What's
40.
our cost going to be now?
40.
Oh.
40 because we sold twice as many.
And then we made a profit of $60.
100,
Take away 40.
40.
And gross profit is 60.
Oh, yeah, so y'all got this.
You have to be good in math. That's all.
Oh, okay.
Numbers.
All right, sell 5 pairs of shoes for me.
Okay, 5 times 20 equals 50.
5 times 20 equals what?
100.
100. I said 50.
So the cost of 5 pairs of shoes will be 100. How much money will we get?
500.
Uh,
Wait, no,
It's,
that's wrong. Hold on.
it's 250.
It's 50. We selling it for 50. Yeah, 250.
And
and
that's
so
That's
debit cost of goods sold for how much?
100.
400.
100. And we're going to credit
So
for 100. We got it. So this
profit 150.
up here, we have it down here. Then so our
And then
sales, how much? 250.
250. Take away
Cost,
100. 100.
gross profit,
150.
50. Let's sell 10 pairs of shoes now.
See, there you go. See, that's what I'm talking about.
So 10 times 20
It's
equals
what?
200.
200?
200. Yeah, 200.
We sell all of them, so how much we getting?
500.
Our cost is going to be what?
200.
100. It's going to be a $300 profit.
Y'all got this down.
Can we just take a test over this now? For the final. I can do this for the final.
Me too. I think I
Okay.
seriously pay attention to understand this class.
Let's move to the next situation where you buy 10 pairs of shoes, but you only sell 5.
So it's going to still be 200 for the purchase.
To purchase is still 200.
And then the journal entry to sell,
So 100.
it's going to be 250.
You know, 5 pairs, you're getting $50 a pair, because you
It's
can't run your shoe store without extra shoes.
250. 250.
250.
Cost of sales 200.
Mm,
Hold on.
Oh, wait, cost of sale. Wait, yeah, cost of sale is 200.
But you only sold 5 pairs of shoes.
Oh, is
We
it
sold
two?
5. So 5 times 50
It's two.
is
5 times 20.
250.
It's
5
100.
20.
It's 100. Thank you.
5 times what?
5 times 20.
Mm. Okay. So that's
And
what.
yeah. So now your profit based on the 5 you sold.
Oh, okay. I see what you said. Okay.
And
Place
then separate 100 equals.
profit back at 150. But you also now
But we
have it.
lost some money.
Well, you lost no money.
I
What
mean, well,
shoe?
we ain't
What
sold
go,
nothing.
go
So
in
we
and
didn't profit something.
do you go in the shoe store that don't have shoes?
We just got some more shoes. Like we got extra shoes.
Would you go in a shoe store that didn't have any shoes? All
Maybe.
right. So you want the shoe store to have some inventory. So they make, they sell. And so for the next day, they got what? They got 5 pairs of shoes and what? And 20 in inventory. So this is more of the situation. You buy 10, you sell part of it. You don't
Wait,
go
what
in
you do at the bottom? You put a 5 at what?
20, the cost.
Okay.
So you bought 200, you sold 100 of them, you got 5 at 20, which equals 100. I know y'all would not be going into shoe stores that didn't have any shoes.
But we have to do that when we like sell less than our, if we don't sell
Yeah,
all of it.
sure. So this is going to be an asset account. It's like supplies. Remember we talked
Oh,
about
yeah. Okay.
Mm.
when you had 200, you sold or used 100, so you got 100 left. So think of the supplies example. You buy it, then when you use it, you expense it. All right, I'm gonna let y'all do this last one, where you buy 10 and you sell 8.
So 10 is gonna be 200.
You buy 10 and you sell an 8. Everybody take a couple of minutes, see if they can determine what's gonna be the situation now. How much money you make?
8 times.
Wake up, wake up.
It's 200 for inventories.
Yeah, 8
Sorry,
times.
200 didn't change.
It's 60. It's 160 for the cost of sale.
Well, how much money you get?
I need to put the numbers as I go.
Well, that's the next thing is a sale.
Oh, I put that's 8. I did that. It's 400.
400, 8 at 50, 400.
Yeah, 400.
So
I
that's
was
what you.
talking about the cost of goods with the 8.
Okay.
I
Then
put
what cost of goods sold?
160.
I guess 160. 8 at 20,
That's what I got. I mean, that's what I did.
160.
Why is it 160?
Because you sold 8 pairs of shoes and they cost you $20 each.
Oh, that's why I can't see these word problems.
You can't see these words. So the sales is what? 400.
Yeah, take away 160.
240.
What's our gross profit?
No, 160 should be right there.
Yeah, this is
The
160.
cost of sales 160. The profit
Yeah,
is 240.
Gross profit is 240.
and
Yes.
then gonna be 10
Then you
shoes.
have 2 shoes left at
Yeah,
20.
2
2 and
equals 40.
equals 40. So this
I
is how
got it now, I think.
we got it. Okay, that sounds good. So this is how we run a shoe store.
So is the so what I guess like for future reference, like if we do this, would the only thing be different is the numbers
But the only
part?
thing different is the numbers. Yeah, so you could do it if the numbers were different, huh?
I mean, I'm thinking that I'm guessing that's what's gonna happen. Like the numbers are gonna end up switching up,
I'm just gonna add up, switch it out.
or is it gonna be 2050 all the time?
Well, let's change it up a little bit.
I guess it depends on how much you're selling them for and how much you bought them for and how much you're selling them for.
Yeah, those are the numbers that are gonna be most important.
Yeah.
Okay, so that's the elementary shoe store that an elementary student would run. You know, uh, I guess middle school student. You know, they run everything, bought the same, cost the same, blah blah blah. Now we get into a little bigger shoe store, and in our bigger shoe store, we sell them at 50, but we make one purchase 5 for 20. Then we purchase another 5 for 25.
See, here you go. You're doing. See, I knew it. I knew it.
What did you know?
That you was gonna do something else that's gonna kind of throw me off. Okay, it's 50, 5 for 20.
But you don't pay the same thing for all your shoes, do you?
Sometimes they have a store that they offer everything the same price. So sometimes they have different stores.
You still sell for 50, but you, in one purchase, you purchase 5 at 20. Then in another purchase, you purchase 5 at 25.
Okay, can you like continue? Cause like
Okay, I
what?
see what you're saying. So the total price is still 50, but you bought 5 that was only $20, and you bought the other 5 that was $25. Okay.
Let's assume you're going to sell 8.
You said 8,
You're going to sell 8 pairs of shoes.
so 8 times 50.
Yeah, that's still going to be 8 times 50.
So 8 times 50 equals 40. I mean 400.
Well, we got to buy them first.
Right. So how many we bought for 20 and how many we bought for?
Oh, he haven't put it. Oh, you got to make up the numbers. Okay.
Now, for our C students, you should be realizing if we sell 8, and some of them cost 20, and some of them cost 25, we get ready to get that cost, what price we're going to use. So the C student's going to sell the old ones first, and then they're going to sell the new ones. That's what the C students are going to do.
But you just take 5 of completely of the 20 or the $25 one, and then 3 from the 5 of the other
Okay,
one.
so let's make our purchase journal entry. In our first purchase journal entry, we bought 5 at 20, so that's what, 100, right?
Mm-hmm.
Yep.
Then we bought another 5 at 25, so that becomes what? 125, right?
Mm-hmm.
So this just, we got two purchases, 5 at 20 and 5 at 25. So we just change that up a little bit. Now, when we sell 8, we're going to sell at 850. It's still going to be 400. So that's not, so we're going to debit cash 400. We're going to credit sales 400. Okay. But now for our cost of goods sold.
So we got to do 5.
So we're going to sell these first ones at 20 first.
So that's 5 times 20 equals
So
100.
they're going to have 5.
3 times 25 equals 75 plus 100. It's going to be 175.
Oh, okay. Well, moving on today. Then we're going to have, so since we sold 8, they're going to sell what? 3.
25.
25. And that's going to equal what? 75. So the total cost of the shoes when we got these different prices is 75. This interest is going to be a debit to cost of goods sold for 75, for 175, excuse me. So cost of goods sold is going to be debited for 175. Inventory is going to be credited for 175. So we had this what, 225 in there. But when the inventory costs different amounts, we have to layer it like that. Sales is what, 400.
Take away 175.
Away to 175. So what's our gross profit?
It's 225.
225.
And we have an inventory?
Yes, we have how many? We have 2 pair of shoes left. Wait, no.
2 pairs?
Wait, how many?
At $25.
Oh, yeah.
We have 2 at 25. So that's what I expect C students to be able to do.
Oh, I'm a C student.
Now B students be able to
But they
do
ain't
like,
what you playing.
now the B students, they're gonna say we're gonna sell the new ones first, then we're gonna sell the old ones. They're gonna sell these $5 ones first. Because they're in a hurry to be a B student. Then they're gonna sell these, then they're gonna sell these. So if that's the case, notice that the purchase journal entry stays the same.
Yeah, I was gonna say that's gonna say the same. The only thing gonna change is the middle number, which is.
Then the sales journal entry is gonna stay the same. I tell you, that Gayla is on top of it today. I should have been calling her more. Okay. So now the B students said we're gonna sell 5 at 25.
125.
And that's gonna equal what?
125.
25. Then they're gonna sell 3 at 20. So that's gonna equal what? 60. And so therefore
125.
185.
185. So notice the only thing that changed is cost
It's
goods.
entry 3.
Yep, Entry 3, cost of goods sold. Everything else is the same. On the income statement, sales are the same.
400. Take away 185.
185. So what's our gross profit now?
215.
So which gross profit you want?
215. I want the first one.
Yeah.
225.
Depends whether you are a Democrat or a Republican. Democrats say, let me have 225 so I can pay more taxes. A Republican is going to say, I want a 215 so I can pay less tax.
Really?
Yeah.
Why?
So remember,
They dirty.
Well,
what you make is
you got an option, and you got that consistency principle, but you can use FIFO or LIFO, but you can't change it from year to year. And so as long as prices are going up, then LIFO is going to produce a smaller number and smaller tax, and Republicans are going to choose the LIFO method. They're going to always sell the new stuff. Okay. Now let's get to the A students. They're going to do a weighted average. They're going to say it's only fair to do weighted average. Get that out for a second.
Hey.
Y'all have statistics yet?
I don't need that.
All right, so weighted average.
what we doing?
Does it mean that you gonna do both of them?
Let me put it over here. Let me cut these out. So I'm just saying on weighted average, all of those top journal entries stay the same. The purchase,
Okay.
the sale. Only thing that's going to change is cost of goods sold.
Okay.
What we doing?
So let's look at how we're going to get the cost of goods sold. We bought 5
At 25.
at 21st.
Oh, okay.
That equal what?
100. Then we did 5 at 25.
Then we did 5 at 25.
125.
Those shoes.
So the total pair of shoes we bought was what?
10.
225.
Oh.
10.
I mean 8.
Oh,
10.
10.
Oh, okay.
Acting up. We bought 10 pairs of shoes.
Yeah. At 225.
And the cost was $225. But now to get our costs, we're going to strike the 20. We're going to get a weighted average cost by dividing 10 into 225.
22.50.
Gonna be at.
You want the decimal number?
Yeah.
22.50.
Yep. 22.
It's 0.04.
No, we don't.
It's 22.50. It don't
You said
average over. Yeah.
it's 22.5.
22.5. So now when we sell the 8 pairs of shoes, we're gonna
We
multiply.
selling them at 22 times 0.5. $22.50 instead.
No, that's on the
We're using the average.
yeah.
Ah.
Use the 20. We don't use 25. So this is kind of easier. We use the average.
Yeah.
Okay.
The A
Times
students
8.
things easy.
Yeah.
So all you got to do is multiply
It's
22.5
180.
times 8, and what did you get?
180.
This is easier.
Yep. How much we get?
180.
180. Yep. This is easier. So you don't have to do all of that layering. So we have 400.
Take away 180.
Yeah, A students, they're smart. They're gonna get the
Okay.
easy. 180. The gross profit is gonna be what?
220.
20. And you're gonna have what? 2 at what?
2 at 220.
22.50.
22.5.
Equals
And
45.
that's all it is.
Okay, I gotta go. Okay.
Okay. So there are 3 methods, and if you look at gross profits, typically, so the C students do FIFO, the B students do FIFO and LIFO, and the A students do FIFO, LIFO, and weighted average. They do all 3.
Oh, see, that's too much.
And so the gross profit, the weighted average is typically going to be between FIFO and LIFO. So if you're working out a problem and that weighted average is not in between those two, could equal one of them, then you might have a little problem. So there's a little check, make sure the weighted average is in between. Okay. So this is what the inventory chapter is about. We aren't going to have uniform costs. We're going to have costs of different amounts. Okay. So well, we don't want to stress out our C students. So we're just going to work with FIFO for the rest of the day. So I have to take care of my C students. I don't want them to get disjointed. So C students, so we're no longer doing FIFO and LIFO. I want you to, just using FIFO, do a sales quantity of 3, and then do a sales quantity of 7. So we're going to do the 3 one first. So all of the stuff's going to come out. So we are back to FIFO. Where we have 5 at 20 and 5 at 25. And instead of selling 8, we sold 3. So go through and fill out the chart for 3. So I just showed the FIFO and the LIFO so the B and C students could go on and charge ahead this weekend and get everything done. But now we're back to the C student. We work it on FIFO only. all we're doing is FIFO in a scenario selling 3 pairs of shoes and in a scenario of selling 7 pairs of shoes. We still are buying 5 at 20 and 5 at 25, and we selling them for $50.
Oh, so what we have to do is for the numbers for different ones, we have to do for each column the way that they're selling them.
Each column. Go down 3, what would things look like, and go
Yeah.
down 7, what would things look like. So start with the 3, everybody do 3.
But using the middle number, the 5 at 25 selling first.
Yeah, FIFO. No, so you're selling the 20 first.
Oh, the 21st. Oh. He
No.
said that.
So get to work. I'm gonna give you about 5 minutes.
And the cost and selling prices are the same, right?
Do we have it done? What is the gross profit? Let me know when you got a gross profit. Just selling 3 pairs of shoes.
You want the numbers, or are you just asking are we done?
I'll just ask what the gross profit was first. So you got the gross profit yet? So just work through the whole thing. Let's get to the gross profit. Let's see if everybody can get to the gross profit. You're only selling 3 pairs of shoes now. Not 1,000, 3. I was still purchasing 10. So this is going to be the same whether you sell 3 or 7 or 8. So you have to learn to work smart with this as you have the problems. If things are staying the same, then you just move them like that. So wasn't any big calculation needed. You bought 5 at 20, 5 at 25. You got a selling price on those 3 pairs of shoes at 50?
150.
Hey, we sold them for 150.
And then the 3 times 20 equals 60.
3 at 20
is 60. And then
60.
mm-hmm.
So in this entry, debit card 60, credit
60.
inventory
So the
60.
150 take away 60 equals 90.
Kayla, you must work in a store that sells things.
I should.
Selling price is what? 150. Cost is 60. What's our gross profit?
90. And we have
Inventory.
2 times 20
You got
equals 40. Oh,
at
and then
20
5 times 20.
equals 40. Then we have 5 at 25 equals 125. So we bought supplies of 225. We sold out 60. So we still got 165 left. Now we on the selling 7. So everybody see if you can sell 7 pairs of shoes now. Some of y'all mighty quiet. I guess only Gala be exempted. Maybe Latanya. Trying to make this
Yeah,
hard.
include me in that.
Hutchberg doesn't want to exempt.
Right. It's 5 at 20. That's 100.
What's this journal entry going to be on the sale?
The same. Oh, the same. Wait. 5 at.
You
Hold
sold some
on.
at 50.
Yeah.
How much you gonna get?
7 at 50 is 30. 350. 7. 350.
Okay. What's our cost gonna?
It's gonna be 5 at 20.
5 at 20.
And then that's 100. And then 2 at 25. It's 50.
So what's the total cost of our shoes?
150.
So we just drop down here 150. Cost of goods sold. So we got 150 out of the inventory. Determine what we made, 350.
200.
Minus 150 cost of goods sold. So we had a gross profit of 200. And what do we have left in inventory now?
3 at 25.
3.
Which is 75.
That's all. That's basically all it is.
Okay, I'm exempt.
And this all coming from the top of the paper? I mean, the top of this Word document?
Yeah.
Yeah.
Okay. Well,
Slow that Huntsbury today. Buford. Kenya.
What you said? Did you call me? I hope you didn't.
No. I gave you a break today. I'll wait the next class period.
Don't do me like that. I was doing it with y'all though. I just wasn't saying nothing.
You wasn't saying no, that doesn't work. You can't be in church and not shouting when the preacher's going on.
I'm a silent shouter. Thank you.
Okay.
We supposed to be doing 7.
Yeah, y'all haven't finished it yet?
I have.
I finished it.
Okay. So you should have had a gross profit of 207. We'd already done it. You were sleeping. Okay. So I'm gonna stop here today and let you digest this in. B and C students, you all can go on to assignments. Your quiz is there. 10-point gift today because it's on adjusting interest, but it's a multiple choice.